What's up, everybody, and welcome to Accounting and Accountability. My name is Dr. Amanda White.
I'm Dr. Nelson Mull.
And hopefully everybody is doing well. We obviously relaunched last week on our new YouTube channel, which is Accounting and Accountability. It goes with our new open textbook that we're developing at UTS, which is a free textbook. And we'll tell you more about that in future weeks because it's currently in its draft form. But we have two really interesting stories for you this week. The first one is ANZ Bank and the accounting software that you might have heard of called MYOB. Nelson, what's going on?
Okay, so ANZ is eyeing a potential stake in MYOB. And so the rumors are that ANZ has approached the parent company of MYOB, which is KKR, which is an American investment firm, to purchase an equity share of MYOB. So, as Amanda mentioned, MYOB is an accounting software and is used to process business transactions. So from paying bills to recording revenue to preparing financial statements.
Aimed at small to medium-sized businesses.
Mostly small to medium-sized.
So, your big banks and that sort of thing aren't using this,
They
but
have their own
small to
systems.
medium-sized businesses.
Yes. So what is the benefit of this potential purchase for ANZ? So what do they do this?
So there's a thing called vertical integration. So if you're ANZ, what you want to do is you want to try and make sure that for your small business banking customers especially, that they're doing their accounting, and most of our accounting systems, like MYOB, like Xero, like QuickBooks, link in to banking systems so that all of your bank transactions go in. So what they're hoping, I think, from this is that with ANZ, if you have a business bank account, there might be some deals of, we encourage you to use MYOB. That might also give ANZ some transparency or some insight into what is happening with their business customers as well. Because often what happens in the accounting in a business is sort of black box. But if you own a share of the software company and you say you should use this, one of the conditions might be, you could be required to use the software so that we can also keep an eye on small businesses.
I guess there's a benefit for ANZ being able to tell their customers, well, if you bank with us, then you can use MYOB, and then you can merge all the transactions, because in the past businesses would have a bank reconciliation.
And you'd have to import the transactions, and the imports weren't always great either. So
real pain. So if it's all integrated, then you can kind of bypass the need to do all this sort of tedious accounting tasks that involve matching up transactions between your accounting records and banking records.
And we see vertical integration in other places too. So it's that idea of buying all the bits in your supply chain is one of those ways that businesses can think about expanding. And MYOB's had quite a lot of owners over the decades. So it'll be interesting. And when they say equity share, equity means that they're buying shares in the company. So they're not just providing a loan, they're buying equity shares. So for all of those accounting students, this is increasing cash and increasing your share capital.
So I guess from there, why is ANZ making this move? Because it seems like they can potentially go without, although there is the benefit. So what's the benefit? What's the actual underlying cause of all this?
Well, we know that interest rates are going up. And the Reserve Bank chairman this week on Instagram, as well as in a number of other places, said to expect 2 or 3 more interest rate rises. So that is going to start slowing down borrowing for businesses and for mortgages. So I guess they're trying to expand potentially their revenue base as well by, not really diversification, but moving adjacently into similar businesses. Now, small businesses are struggling. And there's one industry in particular that's making a lot of noise in the mainstream media. What industry is that?
The building industry. So although, house prices, apartment prices are extreme.
Ridiculously high,
this doesn't appear to be lining the pockets of builders. They don't seem to be better off as a result. It seems like a majority of builders in Australia, they're losing money, and as much as 80% have lost money in the last 12 months. This means that the costs of building a house or an apartment, so the materials costs, the labor costs, are less than the revenue required the revenue is less than the cost of that building. And so it's scary to think that although house prices are so high, that's still not enough for builders to make money. So house prices or apartment price
And
apparently
often
should
that's
be a bit higher.
contracting as well.
Yeah.
So somebody agrees to build an apartment block, you have a contract. That might be a 3-year contract and those prices are locked in.
Yeah.
Don't take into account inflation, potentially, or the cost of rising materials costs.
Absolutely.
And this is affecting big builders. So we've seen really big construction companies that are working on really massive projects, as well as home builders and smaller construction companies.
Yeah, absolutely. And so we've gotten to this stage where a lot of builders, they're experiencing what we call negative equity. And so what is negative equity?
So equity is the value of the ownership. So it's your assets minus your liabilities. And generally, your equity is a positive thing because once you start a business, no business ever, or no bank will let you take out more money than you actually have assets for. However, what we're seeing is businesses shift into negative equity because customers might not be able to pay the bills that they owe, which means previous accounts receivable end up having to be expensed as bad debts. It's costing them more than they originally budgeted to build stuff. We talked about materials prices. There are some construction projects that just can't start in my neighborhood because there is just insufficient timber to be able to put frames together. And even, there's been some stuff in the mainstream media about shortcuts or different ways that builders are trying to work with shorter lengths of timber to be able to build houses. And so, when we have more liabilities than we have assets, and that might be short-term loans for these builders, overdrafts, short-term lines of credit, then we end up in a situation where you have negative equity. And negative equity is not a great place to be because these loans are going to come due and businesses aren't going to be able to repay them. And so what happens next?
And so the worst case scenario we end up with is insolvency. When a business cannot pay their bills, well, they can't operate anymore. And
it's illegal to do so because
you'd
be trying to, you might be trying to get more customers, they might pay deposits when in fact you can't actually provide those services. So it's against the law in the country to trade a business, big or small, when it becomes insolvent.
And so that means if you're insolvent, then you have basically 2 options. First is to kind of try to refinance, try to get someone to buy a bigger stake in your business or find someone else to take on a loan.
Renegotiate your loans.
That kind of stuff. Or to liquidate, which means selling all your assets and then paying off whatever debtors, customers that you have to the extent that you're able to, and basically shutting down.
And it's really difficult. In the US, they have something called Chapter 11, which is bankruptcy protection. That allows businesses to keep trading while they're trying to figure out their debts, which can create a risk for customers, for suppliers who provide them with goods and services. So that's very business focused in the US. In Australia, it's more focused on the people who have lent the money to the business, so creditors, people who are owed money. And so the creditors can call in administrators or the business can call in administrators. And then they've got this chance of, can you restructure or sell your business to someone else, or does it shut down? And we've seen that, throughout COVID, stationary brands like Kiki K, we're seeing it happen with lots of construction firms. And sometimes you just can't find another buyer, which means the business has to be liquidated. You sell everything, you work out how much money you have left to pay to the creditors, and they're not going to get all of it. So they might get 10 cents of every dollar that they're owed, up to higher amounts. And obviously the goal is that we want to try and reorganize these businesses so they can keep going. So they can keep, servicing customers, paying employees, and those employees can keep, buying their staples and keep the economy running. But it's going to be really hard with interest rate rises as well. So it's big wait and see, especially with 2 extra rises coming according to the Reserve Bank. Now, what are you watching at the moment?
I'm really enjoying the F1 2022 season. So seems pretty
what
exciting.
time do you watch
Oh,
this?
no, I'm just watching like the highlights.
Oh, you're watching the highlights, so you're not getting up at like 2
o'clock
in the morning.
I can't do that. But I'm really enjoying sort of like the analysis, the current issues with car and the bouncing of the car, all that kind of stuff. So that's been really fun. How about you?
By the way, did you know that Formula One teams also have accountants? So they need somebody who tells them like, okay, well, yeah, you can invest this much in, adjusting a wing, or every broken spoiler is this much.
There's
so
definitely
there's certainly
cost-benefit.
there's a lot of cost analysis
Yeah.
that goes into winning.
Absolutely.
And you'll see that in accounting, baseball, basketball,
Oh.
every sport. There's lots
Speaking
of
of
data.
which, have you
and
ever
analytics.
watched the movie Moneyball?
I've read the
Brad
book.
Pitt?
I've
It's
never watched the
such
movie.
a good movie.
Oh,
It's
okay,
such
there
a
you
good movie.
go.
And that's kind of like the sort of economics accounting of how to win
That's
in
the
baseball.
genesis of really this statistical analysis to win at sports.
Yeah.
Was that Moneyball thing.
Yeah, absolutely.
I've been watching. I love cooking, as people who are on Instagram will know. So I've been watching New Iron Chef.
Yeah.
And the cooking part is great. I love the cooking part.
Yeah.
Curtis Stone, who you might see in Australia in the Coles ads, is the Australian Iron Chef. And it's really great cooking. The chairman is a very well-known martial arts actor.
The guy from John Wick.
The guy from John Wick, he's like, you need a bad Asian kung fu guy in a movie.
Yeah.
He's always there. I just feel like it's very campy and over the top, his stuff. So it sort of like denigrates the art.
Yeah. But
of
I
those.
guess but the original one was a bit campy as well, when like
The
take a
original was
bite
a bit
out of like a
campy, but
capsicum.
yeah,
or
this
whatever
time
it
it's
was.
a bit, I don't know.
Yeah.
But the hosts are really great.
Okay.
Because they've got a diverse range of chefs, because in Iron Chef originally it was all men,
Yeah.
because it was in Japan.
Yeah.
But we've got a diverse range of chefs and a diverse range of hosts who actually know about cooking as well.
That's
not
great.
just like I'm a host that doesn't
Yeah.
know anything about cooking. So that's always good.
Yeah.
All right.
That's awesome.
Now we have added, if you're watching
Yes.
this on YouTube, in the description there'll be a form,
Yes.
so that if you want to drop us a comment
Yeah.
about anything you'd like us to feature on the show, or if you want us to give you a shout out.
Yeah, or you just have a question for us that you want answered. Yeah, we'd love to hear from you.
And if you're watching this on Instagram, just go to my profile. It will be in the link bit that's in my profile, where you can fill in the form and let us know what's going on. So thank you very much, everybody. I hope everyone is staying well. You're keeping an eye on your budget in these financially uncertain times, and we'll
Yes.
see you next week.